Lesson 4 in this section is candlesticks. We're going to dive deeper into them. So let's quickly go over what is a Japanese candlestick. Well, it is popular and widely used charts. That is pretty much every chart you see are those candlesticks, and more commonly the green and red candles, but you could change them whatever color. But basically, it keeps track of the low, the high, and the open and close, and it prints it out. So that body is from the open to close. And if it opens down here, I just want to make sure you can see it in the camera. If it opens down here, closes up here, that's the body, it's green. If it opens up here, closes down here, that's the body, it's going to be red. Then the wicks, they could be as big or small, and sometimes not even a wick. And those are just saying price did come here, but it was still an open candle. They did not close here, and the body is where the open and close. So most of the time, the wicks are there to grab some price below or above that candle, and people get faked out by them. They see that big green candle forming, for example, and then it closes way down here. Now it has a giant wick, and once it prints, you're like, well, kind of looks bearish now, and then you're emotional. You want to go take a short, and then it goes back up. So as much as I like to understand candlesticks and let them tell me a story, sometimes the story they're telling you is to set you up and fake you out. So you'll need more indicators or a different analysis to combine with that to make sure the story is what the story is and not them just trying to fake you out. So the main ones we already covered: the doji, hammer, shooting star, engulfing patterns, and then the harami. I think I'm saying that right. I'm going to explain that, and we'll look in the chart so you can kind of see what they look like. But it's when a small candlestick is followed by a larger candlestick that is contained within the range of the previous one, it can indicate a potential reversal or consolidation. Well, it's kind of like the engulfing pattern, because if you read that one, it's a small candlestick is followed by a larger candlestick that completely engulfs the previous one. It's like it, but a little bit smaller. And I'll show you in the chart. The main ones you're going to want to use, those first four, really help tell a story. This is kind of it's kind of an engulfing pattern, but not quite. So maybe we're just in consolidation. So these are going to help you identify trend reversals and stuff like that. So let's open the charts real quick. We'll quickly go through these. Let me zoom in. Let's go to a 4-hour. The candles are a lot cleaner, and I like to go to the 4-hour. So let me just point out this one right here. This is kind of what we were talking about. So this entire candle, at one point, it opened here. This entire candle at one point was a solid green candle. And if you're a breakout trader, boom, you're in a buy. You're like, okay, we're, I don't know. You think, whatever. Look at that. From being smacked in a trade to your stop loss, just like that. So using open candles is something I do use, but on a much lower time frame, so I'm not subjected to these big entries and then smackouts, although it does happen. So sometimes you can't trust the live candle. You got to wait for it to, like, for example, this one right here. This is a big green one. It printed as a big green one. So my style, you'll find your own style. I like to wait till it dips back below that second candle and comes in this gap. Now, if I did that, for example, I don't know, whatever. Price came back in, and it did start going up. Even here it went up. And that's when you take profit along these lines and above. So that way, if it does come back, which it eventually did, we never made it to our fake take profit we just randomly drew this to. We were stopped out, but we would have minimized risk and took profits at some of these levels, knowing that price is kind of just chopping around and that. So let's look at some engulfing candles. Engulfing candle, one right there. Look at that body. Completely engulfed it. Now, like I said, sometimes they're telling you a story that's not the real story. Because look what happened. If you're waiting, for example, my type of setup, I want price to come back in here. Well, it went right through, would have took out my stop loss. So that story you can't always believe. And you gotta look at the bigger picture and realize we're going up. This is just taking out certain areas and we're gonna continue on up. Another one right here. That one is our real story. Again, it's lining up with the overall bullish trend. And we had the engulfing. So that's two confluences. Uptrend with an engulfing. That's a pretty good indicator that we're turning around and we're going to continue up higher. So some of these are shooting stars, hammers. More. Now if you go to the daily chart, you can see when it's really consolidating. You'll kind of see those wicks, both sides. So you'll see those candlesticks, those patterns print multiple times throughout here. When I use these, I like to use them when they're not in a consolidation period. Because you can see right here, really none of these helped my cause any which way. But when we're trending, they give out more of an indicator of what's going on. If we're going down, for example, and you see that engulfing, that's a good signal. We're reversing, or we're going to continue back down. You can see here at that peak, no engulf. Then when that engulf happened, we finally ripped down to the downside. So just go through the charts, start to see when these candlestick patterns actually matter and when they do print, areas that they really don't matter. And that'll help you start finding confidence in them and when to just ignore them because they're going to be printing all which way, trying to fake people out, build liquidity in this box before we take an actual direction. So we'll see you in the next slides where we're going to dive into risk management and more technical analysis.